I've been trading for over 3 years now. I turned profitable 1 year ago, and it's all thanks to me understanding order blocks. Order blocks has been a crucial aspect in my trading success. It's so important, that's why I'm gonna teach it to you guys. Because I gotta say, it feels good to make others make money. So let's get straight into it. Alright guys, what is an order block? Order block is a price range area that occurs after a break of structure. And what is a break of structure? Break of structure is a market structure shift. And when a break of structure happens, that's when these order blocks appear. And we can use that order block as our advantage. But first, if you do not know what is a break of structure, then I highly suggest you to go back into my channel. And I literally just recently posted a break of structure guide, full break of structure guide, the only break of structure guide you need actually, and it's on my channel. I just recently posted that. Check that, watch the video till the end, and then come back into this video so you actually understand what I'm talking about. So now that you know what is a break of structure, a market structure shift. Let's say that just happened. We had a liquidity sweep, boom, and then a break of structure to the upside. Where did that break of structure happen? Happened right here to the upside. We was in a downtrend, right? We was in a downtrend, but now we broke structure right here. What happens then? What does it leave behind? What does it always have to leave behind after a break of structure? Always. An order block. If it breaks structure to the upside, then it leaves us a bullish order block. Order block is the price range area, but this is a bullish order block. So order block always occurs after a break of structure. It doesn't matter is it the break of structure to the upside or downside. Now it happened to the upside. The break of structure happened to the upside. So this is a bullish order block. What am I looking now? This order block is right here. I wouldn't enter straight from this break of structure because we want more confluence and better risk-reward ratio. So guys, let me explain you in details what is an order block, exactly why does the price want to go back into the order block. So after a break of structure, what happens usually? A liquidity sweep happens first. Millions of orders get filled. These banks, institutions, and hedge funds fill millions of orders by taking out liquidity from the market. Then break of structure, a market structure shift. What happens? Order block is left behind. These market movers are like, okay, well, essentially we just broke structure to the upside. Okay, there's still this order block. Let us go back into the order block so we can fill more orders. We fill more orders and take out more people out from the market. So they just want to fill more orders. That is their main goal. Okay, and when they get back into this area, that's when we come in play with them. We see another mini break of structure after the order block, and then we continue the trend that happened here, and we get way better risk-reward ratio and also more confluence. Let me just start real quick again. So this time to the downside. We are in an uptrend, right? Uptrend. How does it move in a trend? Higher highs, higher lows. A break of structure happens. Break of structure. Switch of the trend. Now we're going down. But what happens after the switch of the trend? The market structure shift, the break of structure to the downside. What does it have to leave behind? Always a bearish order block after a break of structure to the downside. That is there. It is there. And now the price, the order block is like a magnet also. So it kind of wants to attract this price. And then when it's here, we want to see another mini break of structure on the lower time frame, and then the market can continue its trend. The price can continue the trend, and that's where we make our money. That's where we make our money and get a better risk-reward ratio. Okay, do you guys understand? I know you may wonder, well, Moosh, how the hell can I spot these order blocks in the markets? Don't worry guys, I got you, man. I got you. So this right here, what do we have here? As you can see, you guys here, the same exact thing that I just mentioned. We're in an uptrend, right? Uptrend, going to the upside. Okay, that's right. That's what happened. But then what happens? we get a breakout structure. This is the most recent low, and we broke structure to the downside, which is now we're in a downtrend. We're going to look for shorts. What happens? Downtrend now, broke structure. We were right here. Broke structure to the downside. What does it leave behind? Bearish OB, bearish order block. Bearish order block, guys. It's right here. Why is it here? It's because a breakout structure to the downside, an order block is left behind always. Now, how can we know what candle is the order block? It's right here. It's the last up candle after a breakout structure to the downside. It's the last up candle to the breakout structure after the breakout structure happens to the downside. Now, vice versa, the order block, the bullish order block, is the last down candle after a breakout structure to the upside. So breakout structure to the upside, the last down candle is the order block, and then it gets here, and then we'll continue. Now, what happens here, guys? This is a super high time frame order block, so it has a lot more power. So, guys, in this case, because this is a super high time frame, it has more power. I would go to a lower time frame, such as another super high time frame, 4-hour time frame. Now, what do we have in the 4-hour time frame? We're bearish, right? What do we also have? We have this bearish fair value gap and this daily time frame bearish order block. So that's more confluence. I want to see a hit of the order block, okay? Okay, the price is attracted to the order block. What do I now see? It actually filled a lot of orders right here. What do I scout for now? Now I scout for a breakout structure. So this is the most recent low. Now I want to see a breakout structure to the downside. Okay, guys, this is the most recent low. We didn't break structure here. We broke structure here after we almost completely filled the bearish order block, daily time frame order block. So a lot of orders got filled here. Now it's time to look for shorts, selling opportunities after this breakout structure. Now what do I do now? I would place this right here. And where do I place the stop loss at? To above the new order block, which is this. So, guys, if you understood, after every breakout structure, there is an order block left behind it. So in this case, it's the 4-hour time frame order block has left after we hit the order block and broke structure. There's a new order block. You guys feel what I mean? Like every time it has order block, every time frame has order blocks, but the higher time frame holds more power. So I would enter from here. What would happen? I would put below this liquidity. And let's get it. Boom. This is what I mean, guys. This is what I literally mean. The trend. First of all, the trend switched right here. The trend, first of all, broke structure to the downside on the daily time frame. Left this order block behind. Left this order block, got back into the order block. And on the 4-hour time frame, we see the whole order block get filled. And we see another breakout structure to the downside. And that's where we enter. Do you guys understand? It's actually pretty simple. And I know this may feel like rocket science. Don't worry, guys. You have to watch the video till the end and again. Because literally, that's the exact same thing that I did when I started trading. I just watched countless of videos trying to find the strategy. Because I knew it's time for me to learn and later I can earn, okay? That's what I did. And now I'm here teaching you guys. Now I want to show you guys an example of a bullish order block, which is to the upside, obviously. So let's get it. As you can see right here, what do we have, guys? What do we have? If we look closely, what do we have? We have a liquidity got swept on the daily time frame, most definitely. Look. Liquidity that got swept. What happens after that? Let's just go back in time, okay? Liquidity got swept. After liquidity, we got reaction. We scaled down to a lower time frame, like a 4-hour time frame. Now, what are we looking for? We're looking for a breakout structure to the upside. Okay, guys, this is the most recent high. I want to see a breakout structure above this, okay? Okay, this is the most recent high. I want to see a breakout structure. Okay, guys, what do we have? We broke structure to the upside. What do we have now? What do we have, guys? Look. We have this order block. Why is it an order block? Because it's the last down candle after the breakout structure to the upside. It's that simple, guys. That is the order block. So broke structure. I'm like, okay, cool. I want some more confirmation. I want it to hit this. I want it to hit this. And then we can look for another breakout structure on the lower time frame. So this order block is right here, guys. It's right here. Let's see what's gonna happen. Does it want to hit it? Oh shit. Did you see that shit? Did you see what happened? It broke structure, it went up, continued the trend. The order block is still here. What happens? It hits the order block, immediate reaction. So what would I do right here? If we scale down to a lower time frame, like a 15-minute time frame, what do we have? We can look for a breakout structure to the upside, right here. Do we see immediate reaction? Boom. Guys, that is a good sign. We hit the order block and we see immediate reaction on the lower time frame also. We see a breakout structure to the upside. This is a breakout structure to the upside, as you see. And what does it also leave behind in the after the breakout structure to the upside on the 50-minute? Another order block. So anyways, that would be fine for me. I would enter straight from this breakout structure because we had this massive order block that we just filled, and a breakout structure, immediate reaction after that. Where would I place my stop loss at? Below this order block. Guys, you can understand these order blocks, I use them also as shields and protection for my stop losses. So I would place it right below this order block. And where would I put my take profits in? Above this liquidity. And let's see what's gonna happen. Boom. And literally guys, do you exactly see what happened here? Okay, it was a winner. But if we look closely, first of all, we hit this super high time frame order block. We hit it. We broke structure to the upside. Immediate reaction. That is good sign. That's where I would enter. But what also happens? This is the 15-minute. Hold on, let me just show you guys. This right here, this area is the price range. The 15-minute order block, bullish order block that happened after the breakout structure to the upside on the 50-minute. I used it as a shield, and literally, as you can see, this is a perfect example of the order block. Look, it broke structure, it came back into this order block, filled more orders. This is a protection, stop loss wasn't hit, and continuation to the upside. Money was made, continuation to the trend. And if you want to be super precise, in this case, you would go to even a lower time frame after the 50-minute breakout structure to the upside. You could go to like a 5-minute time frame to get even a better risk-reward ratio, like this. We hit the order block. What do I now want to see? A 5-minute breakout structure to the upside. 5-minute breakout structure to the upside. Where's the okay? And okay, that's not completely a breakout structure. Okay, guys, as you can see on the 5-minute time frame, what do we have? A breakout structure to the upside right here. This is the most recent high. We broke structure right here. Here you could have also entered and get a better risk-reward ratio. Stop loss below this 5-minute order block, bullish order block. And as you can see, these order blocks happens in every time frame. And where would I enter? Where would I put my stop? Where would I put my take profit in? Above this liquidity. And as you can see, way better risk-reward ratio, and money was made. And literally, look again, guys, look how precise and important these order blocks are. Look, if you look closely, what happened, guys, in the lower time frame? 5-minute breakout structure. 5-minute breakout structure to the upside, leave this order block behind it. Again, the same pattern, the same loop continues. We hit the order block. Guys, the order block is just amazing. What happened after this? Yes, I would enter from here, right? I would enter from here, like I told you guys. Yes. But you see how important this order block, how powerful this order block is. Obviously, higher time frame always hold more power. But look, it came here. I would enter from here, but it still came into this order block, and I had my stop losses below that. And the loop continues. The trend has been made. Guys, do you understand? And guys, this is literally what I mean. The higher time frame trend is the direction where you want to go. That's the direction where you want to go. But in the lower time frames, when we see the breakout structures and order block, that's when we enter. And that's when we make money. We make fucking money inside of the fucking time frames. we see order blocks, we make money. Guys, this is also an example of an order block. We broke structure to the upside right here. We are switching the trend. We broke structure right here. Yes, you could have entered from here, but what does it leave behind? Was this the same thing that I just showed you? I'm not sure, but look. If you look closely, here's the order block, the last down candle after the breaker structure to the upside. And what happens? Hits, filled, boom, continue. And what happens then? Liquidity sweep, guys, and continuation to the downside. And another liquidity sweep going up, and that's how the trend moves. That's how the price really moves. That's how the price moves, guys. And you can make money in these times. That's literally what happens every single day inside the Discord. I teach the people and I live trade with them so they can make money with me. Okay, do you understand? And we use these exact same concepts, but I'm just more experienced. That's how I know when exactly can I see them, and that's why I'm teaching it. Okay, that's literally what happens. Everyone's getting paid. These order blocks are found everywhere. Look at this. This is the order block. This is an order block. Guys, look. We broke structure to the upside right here. Left this order block, has not been hit. Boom. Once it gets hit, immediate reaction, and that is a good sign to look for buys. That is one example. Okay, the loop continues, guys. The loop continues. What happens? A breaker structure to the upside, boom, leave this order block behind. The last down candle after the breaker structure to the upside, bullish order block hits it, continues. Guys, this is written down. This is how the price moves. But also, one thing though, you gotta understand, these order blocks appear every time there's a breaker structure. For example, here, this is the most recent, this is the order block, bullish order block. This order block is here. It's valid. It has not been hit. Because what happened here? A liquidity got swept, breaker structure to the upside. A new trend has appeared. These banks, institutions, the ones who actually move the market, millions of orders got filled right here. But sometimes this order block will not get hit just because the banks, they're already happy. They filled a lot of orders, which means they will continue the trend without hitting the order block, okay? Well, guys, I want to give you an example of an order block that you shouldn't necessarily care about. I mean, look, here we're going down, okay? Downtrend, guys. Look, downtrend. We broke structure right here. We broke structure to the upside. The breaker structure to the upside. Breaker structure to the upside. Boom. We're now looking for buys, obviously. But what does it leave behind? It leaves us behind this order block, the last down candle after the breaker structure to the upside. What happens? The order block gets completely filled. Okay, guys, this was just to show you an example of what you must not do. So here's what I must not do. Some people get this wrong. Some people use order blocks like this. Here's the order block. What do? They immediately when it gets hit, like for example here or here, they immediately enter, and then they wonder, why do they get stopped out? The reason why you get stopped out is because once the order block gets hit, you need to see more confirmation. For example, on this was a daily bullish order block, has a lot of power. I would go to a lower time frame, such as 4-hour time frame. I would want to see a breaker structure to the upside again on the 4-hour time frame, just to make sure that it actually will continue the trend. Look. Okay, that was not a breaker structure. Okay, guys, look. This right here, breaker structure to the upside, the most recent high. This closes clearly above it. Now, guys, I can enter. Where do I place the stop loss? Below the new bullish order block, because breaker structure to the upside, the last down candle. Below, right here, okay? And here, I would actually enter, because now I know the trend most likely will continue. Where do I place the take profit at? Above the liquidity. And let's see what's going to happen. Boom. Literally, do you guys see that? I did not get stopped out. I don't place the stop loss right below the order block. I place it a little bit like this, because you gotta understand, the order block could have been right here on the other brokerages. So that's why I don't want to have a super tight stop loss right here. And it's like this. And you also gotta understand the spreads also. So guys, this was also what happened. Perfect. The trend continues now. A perfect example why you should not enter straight after the order block gets hit. You have to see more confirmation. And if you want to be super precise, in this 4-hour time frame, it leaves us this order block behind it. What could I have done to get even better risk-reward ratio and better trade? I could have gone into a lower time frame, such as 1-hour time frame. What would I do now? I see the 4-hour time frame order block get hit. Boom. What now? Another breakaway structure to the upside, guys. Another breakaway structure to the upside. Because this shit happens on every time frame, okay? I would enter from here, below this new 1-hour bullish order block. Write this. And also have some room. Where would I put my take profit in? Slightly below this liquidity area. Because this liquidity area could potentially switch the bias. So this is my trade. I think you see better risk-reward ratio, better trade. More confirmation, and let's see what's going to happen. Boom. Guys, this is what I exactly mean. This shit happens on every time frame, but the hard time frame always hold more power. And I believe the reason why I'm profitable is obviously, yes, I've been in this game, but I understand that this shit happens every single day. Every fucking single day. I've seen it. I've been trading for 3 fucking years. And this happens on every time frame. And that's why the people in my Discord also wonder, like, how the hell do you know that much? Like, you're so young, but you know how to master these markets. Guys, it's 3 years of trading every single day. Literally almost every single day. And that's where the skill comes from, guys. It's market intuition plus the skill. It's that simple. But most of y'all do not want to put the work in. Most of y'all do not want to put the work in. And that's why they're not profitable. But this shit happens on every single time frame, guys. This shit happens on every single time frame, every single day. And you just gotta be clever and smart and have wisdom to understand what's going on. But remember this one thing. Even though order blocks appear in every time frame, the hard time frame always holds more power because the hard time frame is the overview. And also remember this one thing. When you actually see the order block, getting hit, do not immediately enter. Like I told you guys, some of the fucking people do like this. They see the order block area right here. It gets hit and they immediately enter. But what could happen? The shit just continues down. But you want to see another breaker structure, confirmation, and rejection after the order block gets hit, and then the trend can continue, and then we make money. That's when we enter. No, you do not enter immediately when the order block gets hit. No, fuck no, guys. It's simple. It's fucking simple. So you can understand. But guys, join the free Discord from the bio, and literally free course. Don't miss out on any of my videos. And if you want to take this shit to the next level, then read the benefits of the upgrading. But guys, as usual, I'll see you on the other side.